What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. Another trade breakdown today. E-mini NASDAQ, let's get right into it. Daily chart here, you can see we're getting some nice expansion after working that inversion fair value gap, which we outlined Sunday evening in Discord. So we open with today's trading and we trade into midpoint of previous day's wick. Notice how we remain in the upper half of that PD array. That's what we want to see. That's perfect. I believe we went just 1 point beneath that wick, so that's precision. We've done a lot of work the last 3 days inside of the inversion fair value gap. This day here, here, here. So I like how we opened today, traded down midpoint of the wick, but we did not touch the higher than daily inversion fair value gap. To me, that indicates that NASDAQ is done using this level, and we can possibly explore buy side above these individual daily highs, the rejection block, and then ultimately what I'm looking for, all-time highs. So a couple of levels I'm annotating here. We have our current new week opening gap here, and then we have yesterday's new day opening gap between this candle's close and that candle's open. I also have the high of this daily SIBI bearish fair value gap, so this large inefficiency here. I'm annotating the high of it, and then I also have midpoint of that wick. I'm drawing that through as well. So new week opening gap, new day opening gap, and these two levels here is all I'm really concerned with for this session. 15-minute chart, we did have some NVIDIA earnings stuff come out after market hours, but I want you to notice what we did here. Okay, this isn't just random manipulation. If the market is already predisposed to go higher, if we're bullish, which I am, looking for potential all-time highs, what is ideal when we have such manipulation like NVIDIA? I love how we open, we trade up, tagging in buy side, disrupting all the buy side liquidity. Anybody who wants to go break out on this high, they're tripped in long. Okay, anybody who has a protective buy stop above that high, they're taken out. Then we drop down, clearing out sell side, but we also have relative equal lows here. So that's like a bang bang sucker play because we open, cleared out buy side, took care of the business there. They're no longer allowed to participate. Then we traded down, clearing out relative equal lows. They're no longer allowed to participate, still remaining in the upper half of the daily inversion fair value gap. So that's free game. Okay, there's nothing wrong with that. And then we see the rally higher. So before they set the stage for today's morning session, they do the dirty work using NVIDIA as a catalyst. So that's beautiful. That's perfect. I like how they cleared the board there. All right, and let's just go ahead. You can see we open at 9:30 here, trade up into that daily fair value gap high, trade back down, working that new week and new day opening gap, hitting the midnight open to perfection, Tremaine's model, and then we rally. 5-minute chart, electronic trading hours here for NASDAQ. We have relative equal highs, like a triple top, this high, this high, this high here. We run all of that out and trade into the high of the daily fair value gap at 9:30. I am treating that as a Judas swing. Okay, we're not interested in chasing that. We failed to reach midpoint of the wick on the daily chart. That's important. That was a catalyst that I used for my trade. And then we trade all the way down, clearing out the sell side and trading into our cluster of new week, new day opening gaps. Look at the bodies, respecting that old new day opening gap from yesterday. Displacement, come back down, order block, and then we rally. All right, 1-minute chart. I'm showing all three indices here. I did take shorts today, and here's part of the reason why I was comfortable looking for lower prices. Compare the three indices, and in the stream and Discord, we're flipping back and forth between S&P, Dow, NASDAQ, dollar. We're looking at all these things, and I'm walking the members through how I like to use all these indices in terms of, is NASDAQ giving us a suspect rally higher, or if all indices are looking strong, then I can expect NASDAQ and its rally at 9:30 to be sustained and will likely have a trending day. But we open at 9:30 here on NASDAQ and trade a higher. So I'm saying, okay, I want higher prices on the daily. I'm expecting all-time highs. I like everything I'm seeing. Okay, there's nothing wrong with this. But then I'm looking at Dow. Dow at 9:30 open, it just fell out of bed. It shows no willingness in wanting to work higher. Okay, that's raising eyebrows a little bit, because if I see Dow looking like this and NASDAQ looking like this, I'm leaning more towards treating this as a Judas swing, suspect rally that's getting everybody to chase it. And then I look at S&P. S&P, we open at 930, get a little movement higher, but it's immediately overlapped. I'm telling the Discord members live in stream, if we start getting below the bodies in here and we start breaking lows, then I'm treating all of this as a suspect rally, because Dow has already been weak. It's leading to the downside. S&P is just struggling to find any footing, any means of support, and then it breaks lower. So I'm comfortable looking for shorts and trusting that this initial move at 930 is just getting everybody to chase it going long. All right, we're now on a 1 minute chart on NASDAQ, but now we are in regular trading hours. We have relative equal highs buy side. There are traders wanting to go break out long above these highs. They're setting a buy order saying this is resistance, right? We hit it here, resistance here. Okay, they have a fat zone drawn, look, resistance here. So they're saying if we get above that resistance zone, I want us to go long. I want to go long. I'm placing a buy order. So as soon as we open at 930 and do this here, they are trapped in their long. They're triggered long. That's perfect. Huge excitement at the open, but what are we trading into? The high of that daily fair value gap. And notice how NASDAQ does not have the willingness to reach midpoint of that wick. Let's go back to it. This wick here, okay? The high of the SIBI, and I'm allowing it to trade to as much as midpoint of that wick. NASDAQ has no willingness in doing that. And at this time in here, Dow is already breaking lower. S&P is struggling to work higher. So I'm looking for signs that NASDAQ wants to rotate lower. Something we've been covering the past few breakdowns, we have a short-term high here. We have a short-term high here. So as soon as this high forms on this candlestick's close, that's your short-term high pattern, that makes this high an intermediate-term high. Okay, an intermediate-term high is when you have a short-term high to the left, short-term high to the right. That high is a strong high. It should not be taken out. Okay, we're likely to go lower if you have narrative, if you have directional bias, which we do. So play around in here. Okay, we fail to reach midpoint of that wick on the daily chart, displace lower, come all the way back down. We have a bearish order block coupled with a volume imbalance. That is a high probability order block. We work lower. Now there's no fair value gap here on a 1 minute. So what can you use? Well, we have this large down candle, displacement candle. Take midpoint of the wick here to the left of that large candle. Take midpoint of the wick here to the right of that large down candle. Midpoint of that wick and midpoint of that wick forms one fair value gap, and we call that an implied fair value gap. So when we open on this candle, this up close candle, and trade up into it there, that could be your short. Sells off into our opening range gap, and then all our PD arrays, midnight open, beautiful, beneath the 830 open, old new day opening gap, current new week opening gap, all that good stuff in here. All right, so are we chasing this at the open? Are we looking to buy any order block up here? Are we looking to buy any fair value gap in here? No. But what if it rallies? We don't care. I do not care if NASDAQ rallies, makes the low here, higher high, and it's just higher, higher. I'm not interested in participating in any of that. Okay. My thought process is whenever we open at 930 and it's just super fast, one directional like this, and we've engaged liquidity, we've trapped traders in going long. I know that they're trapped and they're long because they want to go breakout, and everybody sees this and gets excited. They want to chase it. They want to go long. They don't want to miss the move. It's not only until we punish them for chasing, that's when you get the movement higher. So 15-second chart, which was what my entry was based off of, regular trading hours, zoomed out so you can see the relative equal highs. We run that out, trade into the high of that daily fair value gap. Do not have the strength to trade into midpoint of that wick. Dow is looking bearish. S&P is looking bearish. Bearish order block breaker in here. You have a high, low, higher high, break lower, up close candles, 2 consecutive before the displacement. That's a bearish order block. Rotate lower, opening range gap, and then all the stuff in here. Entries, okay. I'm already anticipating this to fail, this swing low. So here I'm showing the executions, selling one contract as we're trading back beneath the high of that daily fair value gap. And then I'm already anticipating this low to be taken out and possibly act as a bearish breaker. So once I see we're respecting the up close candle, bearish order block, market order short one contract. Market order short another contract before we're even taking out this low. Stop loss above the high, allowing it to trade into that 1 minute volume imbalance coupled with a bearish order block. It can trade into that, that's fine, but it should not take out the high. All right, and then my exit, I was aiming to make a 100% gain on this account. I only needed, I believe, $1,800 to do it. So I was aiming for $2,000. So my exit was set right at 2,000 bucks, which is right here. That's my exit. Now, if I wasn't aiming for a fixed dollar amount, I would have liked to aim for the opening range gap as a partial and then possibly hold for the midnight open. We've seen that be traded to all week. So here's all the verification stuff. Same account number, same business, connected green dot. You see the P&L for today, $2,000. And that is all she wrote. So as always, I'm going to roll the payout footage of me withdrawing the funds. This little series thing, I guess, is done. I've made $10,000 on this 10K account, so I've doubled it. That's a 100% return in, I believe, 6 trading days, if I'm not mistaken. I think I took maybe 8 or 9 trades, definitely no more than 10 trades, and 100% growth. So I'm back live trading in Discord on my main account, 6-figure account, on Wednesday, September 3rd. This account, I'm probably just going to withdraw the remaining funds, empty it out, and put it back into my main. This is really my account to just kind of take a break from August, do something on the side, and I was able to double it and take out 10K in about 6 days. So I think I handle my business on here. And yeah, we're back on the big boy account on Wednesday, September 3rd in Discord. It's going to be a lot of fun. But enjoy the payout footage. I'm also going to show quick clips so you can see all the executions were shown either here on YouTube or on Twitter. No trades were hidden. You're going to see all the history of me scrolling back and whatnot. So do what you want with that information. But love y'all, man. Appreciate y'all supporting the channel. And I'll see y'all when I see y'all. All right? Peace.